Hey, this is QJ, and welcome to the 50th episode of Finance Fridays. Grabe, I never thought that I would reach this far, and thank you so much for staying with me and helping me also in my journey towards financial freedom and financial literacy. By the way, if you are new to my channel, this is a weekly program where I interview entrepreneurs, personal finance personalities, and purpose-driven individuals from different parts of the world to talk about their stories and mindset to help you prosper with a purpose. This video is streaming on Facebook, YouTube, and LinkedIn, and will also be available on my Pera and Purpose podcast on Anchor, Spotify, and Apple Podcast. So if you're new to my channel, please like, share, and subscribe to Purpose Driven Finance on Facebook, YouTube, and also connect with me on LinkedIn. By the way, a huge shout out to Ayala Land Middle East and Go Hunter for supporting my advocacy on financial literacy. And before we start, I just want to give a quick disclaimer before this interview begins. Because the opinions, thoughts, and ideas expressed in this episode do not constitute legal advice and is for informational purposes only. We strongly suggest that you do your own research and speak to your financial planner. So, guys, I want to ask you this question. Can you really retire early even with a small income? Okay, because tonight my special guest started his career as an English teacher, and after paying his debts he aggressively began investing in the market. During his mid 30s he became a millionaire. During his mid 30s he became a millionaire on a teacher's salary, and by age 40 he was more than comfortable and financially independent. So this is going to be a very special episode as I am joined by the author of this book, Millionaire Expat. So let me introduce our special guest. He is a personal finance journalist, a speaker, and the author of international best-selling books, Millionaire Teacher, and the book that made me leave the financial services industry, The Millionaire Expat, also known as the book that your financial advisor don't want you to get a hold of. Okay. He's been featured on CNBC, The Wall Street Journal, Business Insider, and has written columns for the Globe and Mail, Canadian Business, MoneySense, Internaxx, and AssetBuilder. Since 2016, he has spoken at businesses and international schools in over 30 different countries. He's also the first person to have a number one selling finance book on Amazon, Amazon USA, Amazon Canada, and from where we're from right now, Amazon UAE. Wow. So to share his wealth building tips, let us all welcome the millionaire teacher, Mr. Andrew Hallam. Hey. Good evening, bro. Thank you so much. I mean, I'm still, I still couldn't believe that you are here on Finance Fridays, and you have accepted my invitation because it's the first time that I've reached out to an international author. I just tried my luck to connect with you on LinkedIn, and guess what? We're here, and thank you so much once again. I couldn't, I couldn't stop saying thank you because your book, there's actually three books that changed my life. That the first one is The Seven Habits of Highly Effective People by Stephen Covey, and then The Purpose Driven Life by Rick Warren, and then this is the recent one. it made me it made me realize why I wasn't selling those savings programs that I was supposed to sell even from day one when I worked in a brokerage firm. And I really want to say that this book has helped me understand better low cost investing and how or what other investment vehicles I can teach to many Filipinos here and also in the Philippines. So Andrew, thank you so much.
Hey Jay, thanks for that really warm welcome, and it's absolutely my pleasure to be here. Thank you so much.
Yes, and we'll be talking about how to build wealth with a low income because you started from there. You mentioned in your website that you were not really well off, and I just want to know, Andrew, can you share with us a brief information about how you started from working on a teacher salary up until you became a millionaire teacher?
For me, Jay, it was meeting the right person at the right
Mm-hmm.
time. And in
Mm-hmm.
so many cases, for so many people, you could say, oh, this person did it all on their own. But in a way, there was always someone that helps you by sometimes planting a specific seed in your brain,
Mm-hmm.
making you see things from a certain perspective. And so I met a guy who was a mechanic, and he was a self-made millionaire. And I was working, and it was a summer job that I had when I was a
Mm-hmm.
university student. And so I would wash buses and fuel them. And one of the mechanics at that place, rumor had it that he
Mm-hmm.
was a self-made millionaire. And I thought, that's impossible. That's impossible. He doesn't make that kind of money. There's no way he can be a millionaire. But
Mm-hmm.
the other guys all said to me, listen, you must respect what this guy has to say. If he ever wants to talk to you about money, you make sure you listen to him. So I thought, wow, that's interesting, but I didn't really necessarily believe it. And then one day, this guy started talking to me, and he started to show me how compound interest worked.
Mm-hmm.
First he asked me, like, what would you do if I gave you $10,000? And I was like, oh my gosh, he's going to give me some money. It wasn't. He wasn't going to give me money. He just wanted to know what I would do with it. And I
Mm-hmm.
told him that I would pay off my student loans or put it towards my student loans. And
Mm-hmm.
he said to me, like months later, he said, if you told me that you would buy, like, you'd spend it on another car, or you'd get a better car, or you'd get a new stereo or something like that, he said, I wouldn't talk to you again unless I had to.
So that
So
was a test.
yeah, it was a test, and he showed me how compound interest worked, and he showed me how if I invested small amounts of money over time, especially if I had time, and because I did, I was young, I was only 19. He showed me that by investing a relatively small amount, I could grow relatively wealthy later in life. And
Mm-hmm.
so this was really my inspiration, was seeing how money compounds over time, how it grows. Like, to a Canadian, I can say it's like a snowball. But of course, I'm
Yeah.
speaking to Filipinos or people in Dubai. They're like, what? What are you talking about? Snowball. But when you have a snowball and you have this wet
Mm-hmm.
snow and you pack this
Yeah.
little ball and you roll it,
Mm-hmm.
at first it grows like small amounts of snow on it. But then the bigger it gets, the more snow it starts to, like like a
Yeah.
magnet, it draws more and more snow. And it's
Yep.
not long before it's so big you can't even push it. It's like it's as high as your head. So
And
that's,
that's the power of compound interest.
yeah, and that's how I did it. So I started out,
Mhm.
and for me, it was, at the time, it was $100 a month,
Wow.
and that's how I started.
$100 a month.
Hmm.
Wow. See, guys, it's not about the salary. It's really about how your habits are in terms of managing your finances. Now, I'm curious, Andrew, because many people would say that, or some people might say that being a teacher is actually not a low income salary, but
Hmm.
for you during your time, it wasn't, right? And I know because I was actually checking the incomes of Filipino teachers in the Philippines in the Philippines for 2021. I think it started at 21,000 pesos. That's like it's low for an entry level teacher,
Mm.
and some might have 60 plus thousand pesos. And I think it might take some years before they acquire that particular income. But for you,
Hmm.
even when you were, I mean, you started as a teacher and you retired as a teacher as well, right?
Hmm.
And how was your experience when you were starting? I'm sure it wasn't that easy. What were the strategies that you were using so that you can save and invest even with a low income?
So what I did, Jay, was I wrote down everything that I spent money on. So I had a
Mhm.
book, and in that
Mm.
book, I wrote down every penny that I spent and
Okay.
every penny that I earned. So I didn't necessarily have like a budget where I said, "Oh, I
Mm.
will spend this much per month on food, this much per month on entertainment, this much per month on whatever." It's,
Whatever, yeah.
instead, because I found that life life is so different month to month, year to year.
Mhm.
So many things can just surprise you. Financially, you
Mhm.
have to pay some bill that you don't expect,
Yeah.
or so I found that if I had a budget, it could be demoralizing if I thought that I would be able to live on a certain amount and in 1 month I had an expense that was going to be relatively high. And so I didn't want a budget, but I did document every penny that I spent. So I wrote down everything. And when I did that, Jay, I became really aware. And I think
Wow.
that was the key. It was an added level of awareness where every
Mm.
penny went. And so what I did, and I think this is what would happen for, I think everyone should do this. Like
Yeah.
everyone listening to me right now, no matter
Mhm.
how efficient you think you might be with your money, you won't be as efficient as you won't reach your full potential with efficiency
Mhm.
until you document every penny, every peso. You know where it goes. And so when you do that, what ends up happening is you start to see some expenses that are a little
Mhm.
higher than you would have guessed. They're a little higher than you would have predicted. And some of those
Mhm.
expenses are things that maybe you could cut back on, and it won't really affect your life in a bad way to cut back on
Mhm.
those. And so for me, this is how I think it worked out, where I thought, okay, I can see what I'm spending in each category. And
Mhm.
in some areas, I thought, I'm spending too much on that, and I'm not getting a lot out of that.
Uh-huh.
So I need to consciously think, no, I'm going to cut back on that. And what it did, Jay, was it ended up giving me more, in a way, it gave me more
Uh-huh.
income. It didn't give me more income, but it reduced my expenses. And
Yes.
and that's equivalent to getting more income. And so
See.
this was how I was able to save more money over time. And then, of course, over the years, I made a little bit more money too.
Mhm.
So
Mhm.
with my job, my salary increased, and so I was
Mhm.
able to save more and more over time.
And I like what you said because you're one of the few guys who are not a big fan of budgeting. Although I am, I did try what you said before. I was tracking my expenses, not on a daily basis, I think, but I think on a weekly or monthly basis. But every end of the month, I make sure that I track all my expenses,
Hmm.
and I do a budget that I plan to spend for next month. But you're right because there are times wherein budgets make me deprived or restricted
Hmm.
of the things that I want
Hmm.
to do. But when you track it, because right now I'm using an app. I heard one of your podcasts, and
Hmm.
you were a guest, I think in Afford Anything or Paula Pan's podcast or in any other podcast that I've heard of. You mentioned there that you have an app right now
Hmm.
that you use to track, and I'm using an app as well that helps me track my spending for like 3 to 5 seconds, so it's much easier.
Hmm.
And you're right when you said about self-awareness because tracking your spending habits will make you be very aware of where your money is going to instead of wondering where it went. And that is that is one common thing that many, and not just Filipinos but also other expats fall at trap of. They just spend unconsciously and could not even wonder where their money went by the end of the month. Now,
Yeah.
as your income was increasing, was I think it's human nature that our expenses also increase. How were you able to navigate through that particular change in your life?
I think that for me, because I was so interested in controlling my money instead of having my
Mm-hmm.
money control me,
Mm-hmm.
I didn't end up necessarily falling victim to what we call lifestyle inflation.
Mm-hmm.
So, the more money you have, sometimes the more you end up spending. And I would see this happening with people who I worked with.
Mm-hmm.
And we we had a friend in Singapore, and she was a Filipino
Mm.
and Filipina, right?
Yeah, Filipina, yes.
Filipina.
Yes.
Salamat, salamat.
Salamat po.
I should have said magandang maga to everybody, right?
I didn't know you can speak Tagalog or Filipino.
I have to tell you, the Filipino,
Wow.
the Filipinos are like my favorite people in the world.
Wow, thank you so
They're my
much.
favorite people, and you know why?
Why is that?
Because they are so generous
Mm-hmm.
and so welcoming. Obviously, there are people listening to this and they'll think, well, not all of us, or not every Filipino. And that's true. But I just find that there's so much laughter generally,
Mm-hmm.
and
Yeah,
people are really, really generous. And so, anyway, I was saying to my
that's
friend
true.
in Singapore, and she's from the Philippines, and she didn't
Uh-huh.
have a high salary, but she was a pretty good saver. And I said
Mm-hmm.
to her, like, Jane, do you know you have more money than a lot of the people that I work with? And she said, no,
Mm-hmm.
that's impossible. Like, they make so much more than me. I said, no, Jane, it doesn't always matter how much you make if you
Mm-hmm.
spend everything. So if you spend everything, doesn't matter how much you make, you're not rich. I don't care if you have a Ferrari, and
Mm-hmm.
that doesn't make you rich, because if you're making $1 million a year and you're spending $1 million a year, if that person loses their job, they have nothing. So I would
Yeah.
say, and I would tell Jane, Jane, no, they're poor. I don't care how much money
Mm-hmm.
they make. If they spend everything they make, it's just a mirage. It's all fake. They're not really rich. They just look
Yeah,
like they living a rich lifestyle. So
true.
I met so many people, Jay, who would earn like relatively small amounts, who would have
Mm-hmm.
so much more money. And I say this in the terms of freedom, because if
Mm-hmm.
you lose your job, can you survive? Can you put food on your table? Can you pay for shelter?
Yeah.
And I think this is the whole point of the money aspect. It's not to grow rich, because where's
Yeah.
the point in that? That's not where wealth has no real correlation with happiness. But
Mm-hmm.
but what it can do is it can give you a degree of security and choice.
Mm-hmm.
So
Yeah.
let's say you have an employer and your employer is mistreating you. Like,
Mm-hmm.
everybody at some point has worked for somebody who didn't respect them. Everybody,
Mm-hmm.
right? And if you spend everything you make, you're stuck. You're
True.
stuck. You have to stay with this person even if they mistreat you. And everyone has worked with someone who didn't respect them at some point. But it's
Mm-hmm.
so nice that if you have the safety net, if you have some money aside because you've been saving, it's so nice just to be able to say, no, I'm done with this. I need to move on.
Mm-hmm.
And that time period between the old job and the new job,
Mm-hmm.
it might take a month or two or five or even a year.
Yeah.
It's nice to know you have that choice to make that decision to move somewhere else.
Yeah, and that's actually true. And I actually have a lot of former colleagues before that they're stuck in a job that they don't like because they don't have any other choice. They think they don't have any other choice because they
Mhm,
couldn't save anything by the end of the month, and they could not control their spending habits.
mhm,
And what you said is actually true. Money may not buy. I mean, it doesn't relatively equate to happiness, but yes,
mhm,
it can give
mhm,
you the shelter and the security that you need and peace of mind. I mean, money can't buy peace of mind, but it can really buy some time for you to at least relax and think through with your life, right?
mhm,
And you've mentioned a lot of interesting money saving tips, and in addition to saving money, but by the way, before I go to that question, how much do you think should a person with low income save? Is there a certain percentage that you require? And if
mhm,
ever there's really not enough money to save. Let's say if they're living paycheck to paycheck, what can they do about that?
Yeah, that's such a challenge. I think
Mm-hmm.
the first question is save as much as you can save. Well,
Mm-hmm.
not necessarily. You don't want to be miserable. Like you don't want
Yes.
to be just like eating no vegetables and only rice, right? Like, so there's a certain point, but within a reasonable expectation, save as much as you can. So
Mm-hmm.
if it's 5%, great. If it's
Mm-hmm.
10% or 20% of your income, even better. The
Mm-hmm.
important part is to somehow find a way to try to save. Now, if you are in a situation where you're not saving anything, you're
Mm-hmm.
really struggling in that
Mm-hmm.
sense. Um, Obviously, if you are in that position and you're
Mm-hmm.
really careful with your money and you're tracking everything you're spending and you
Mm-hmm.
can't save, then the only real option is somehow, some way, try to find a way to increase your income stream just a little bit.
Mm-hmm.
So if you can somehow maybe speak to your employer and
Mm-hmm.
maybe get a little bit of a raise, like if you can get a 5% raise from them, explain very kindly that you would like to try to get ahead. I think most people, they would
Mm-hmm.
respond to this, to somebody who says, hey, I love working here, it's great, and I'm actually
Mm-hmm.
trying to set some financial goals, and
Okay.
I'm not able to save any of my salary net right now, but
Mm-hmm.
I want to set a goal. And if I could earn 5% more, I could save that
Mm-hmm.
full 5%, and that can go towards my future. Is there any way you could help me? This would be great. Like for someone who's right on that edge,
Mm-hmm.
always use the words, always ask. Like you said to me, oh, you asked me on LinkedIn to be on here. And I
Yes.
think the ask is so, so important because it costs nothing. So I refer to it as like a basketball. And you take
Yes.
the basketball and you
Mm-hmm.
throw it at the hoop. And
Mm-hmm.
it might go in and it might not. But if you don't
Mm-hmm.
throw it, it will
Won't.
never go in. So
Yes.
you have to take that chance. Always take that chance.
That's so true. And speaking of basketball, there's a quote that I read that you miss the shots that you do not take, and it's very same as asking. And
Exactly.
that's I think some or many Filipinos are also not as assertive in terms of
Mhm,
communicating salaries with their employers versus other
mhm,
nationalities.
mhm.
They would just what what's the word, they would just allow themselves to earn that particular income even if they know that they're working so hard.
Yeah.
And in my past episodes, I've been me and my some of my guests were also telling that you really have to make sure that you communicate very well with your employer
Mhm,
about your goals, your financial situation, because if not, they would never know that you're into that situation at all.
mhm.
And by the way, when you were also starting, I think you've also lived the life with beans and rice. Is it true when you were building well?
I live frugally, yes,
Uh-huh.
but I did make sure that I also had, like, vegetables. Like, vegetables are really,
Mm.
really important. So I made sure that I ate healthily. Um,
o-
but I wasn't really, like, eating out and going to restaurants,
Okay, I see.
like, very, very rarely. And so, yeah, the funny stories, like, when I was young, I was
Mhm.
living on this beach, and there was this guy, and he lived next door, and he was old, and he was retired. And one day I
Mhm.
saw him, and he had this big bucket, and he was going and digging like clams. So I thought, wow, he's digging clams. So I followed him, and I was talking to him, and he had so many of them. And I got this idea that if I dug clams with this guy, I would get
Mhm.
clams that I could eat. That would be like free protein. And I tell you, Jay, so I ate that year. I ate so many clams. I, I ate clams, potatoes. I would have rice and pasta, and I would have salad. I would always make sure I had a salad. But
Wow.
But today, I can't even eat a clam.
Wow, I mean, you really have to be very creative with your money if you want to
Yeah,
save
yeah,
a good amount of it. And
yeah. And here's one thing too. I think I should mention, Jay, which is
yeah,
I
sure.
find this part really fascinating.
Uh,
Um, well, I was in Dubai a couple of years ago, and one guy
mm-hmm,
said to me, he said, Andrew, you sacrificed so much to save money when you were young,
mm-hmm.
and you mustn't have had any fun.
Yeah.
And what I find so interesting is that today I'm financially independent,
Mm-hmm, mm-hmm,
and so if I don't, I will continue to work because I enjoy it. So I continue to write. I continue to give speeches around the world. I love it. So it gives me
mm-hmm,
purpose. But I'm in a position where if I couldn't work, I'd be okay, right? So I
mm-hmm,
have I have enough money. And so if you compare me now to me when I had no money and I was maybe living, eating the clams and riding my bike long distances to work so that I could
mm-hmm,
save money and not drive a car,
mm-hmm.
I I was just as happy then as I am now. There's no difference. Like money did not make me any happier. In fact, the fun part, it's hard for many people to understand this, but when you
Mm-hmm,
set a goal and you're working towards it, even if you're taking tiny steps,
mm-hmm,
it feels so empowering to know that you're working towards some kind of goal. And I knew that I was. And
mm-hmm,
really true wealth anyway, and this is something I love about Filipinos, true
mm-hmm.
wealth is in the relationships with other people. That's really where your happiness is. Honestly,
Yes.
that's where your happiness is. It's not with money, it's with people, it's with your friends, it's with your family. When I go through Dubai and I was riding my bike through this really wealthy area of Dubai, and I heard like laughter. And I was like, wow, this is so cool. I would hear laughter. But Jay, it wasn't laughter from the wealthy people that own the houses.
Mm.
It was laughter. It was laughter from the maids. It was
Wow.
laughter from the drivers. It was laughter from the people who were like earning a fraction of
Yes.
the money and had so little. But you know what they had? They had perspective and they had
Mm-hmm,
their relationships and friendships, right? And so many of them, as you know, were Filipino.
mm-hmm.
And so I really do see this as the most important aspect of success is truly your relationships. Truly.
And I would really agree with that because I mean I there's also a study by Harvard, right? I think it's a decades old of study that the
Yep.
the 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 correlation of happiness is also related to the relationships that they built, a
Yes.
community that they have around them. And
Yes.
it's not the money, it's not the fame, it's not the material things, but relationships. And
Yes.
I'm really happy that you mentioned that because many people go to Dubai, go to different parts of the world to chase money, thinking that it would lead to happiness.
Yeah.
But if it were true, then all the people who went here should have been the happiest people in the
Yeah.
world. But
They're
it's
not.
not, right? They're
No.
not.
No.
Yes.
No. And
And
and and you would hear laughter from the richest
uh
people. If that were the case, you would hear
mhm,
the most laughter from the
mhm,
richest neighborhoods, the people that own those really big houses, that own those really big cars, and you do not. You do not. So, it's so interesting for us often to look across the fence and you see
mhm,
someone who has something that you don't have, and you think, oh, if I only have that, my life will
yeah,
be better or I'll be
yes.
happier. So it's, again, when we look at money and the acquisition of it, I'm looking at it as an element of a safety net, because
Mhm,
material things don't make you happier. A new car, bigger
mhm,
car, bigger house, no way. These things do not make you happier. Otherwise, we would know that the people in the biggest houses and the biggest cars would be laughing the
mhm.
most, the biggest smiles, the happiest people. That's not true. right? It's about the relationships, but the amount, when we do talk about acquiring some money and trying to make sure you
Mhm.
save money, it's just to give you that freedom where
Yes.
you can have choice. Like we talked
Mhm.
about the example of the employer that you're not getting along with, it's
Mm.
just not working. Or it gives you a choice, one, to potentially choose a lower paying job in the future that you enjoy over a
Mhm.
high paying job. So that's another thing that, like, my wife and I are probably always going to work at
Mhm.
something. It's something. And I think that is so important to remember, because working gives you purpose. It gives you,
Mhm.
and it doesn't have to be full-time work, but
Yes.
it gives you purpose. So even if we choose to do something that pays us very little, um,
Mhm.
we have a choice to do that. Like, it
Mhm.
doesn't have to pay a lot, because we've saved enough money so we could accept a lower paid job that we actually love, instead of a
Mhm.
high paid job, which is not fun, right?
Yes. And yeah, that's so true. And many people correlate success with money.
Hmm.
But there's
Hmm.
one thing I realized that success is not the key to happiness, but
Hmm.
happiness is the key to success. And I read it somewhere. It's not actually mine, but I mean, it really stuck in me. And for the longest time that I was chasing money, it always ran faster. And I always got in trouble as I was building my wealth. Because if I'm just gonna share with you some of my personal experiences in Dubai. In my first year, I got scammed by a Ponzi scheme because I thought that I was so late in building wealth that my but the only way for me to get ahead or at least get back on track is to invest in that particular investment vehicle that I don't even understand and I don't even know where the returns are coming from. But they just told me that it would my 4,000 dirhams would turn into 15,000 after 3 months. So I just gave the money, my parents' money. That's actually my parents' money because they thought that that's also a great way to earn more money versus in the Philippines.
Hmm.
So now
Hmm.
that's I think I'll also ask you some questions about how to successfully build wealth because there are people who would really do their best to get all your hard-earned savings and income. And
Hmm.
before we go through that and ask you more of your tips on how to save money even on low income or how to build wealth on a low income, let's just have a quick break from one of our partner sponsors. So don't you, don't, so guys, just stay where you are, and we'll be right back.
As city living turns more quickly, the need to always be in step with the daily rush has become ever more important. A need that developer Aveda Land has chosen to take head-on with their newest development, Aveda Towers Verge. Located in Mandaluyong City, Aveda Towers Verge gives its residents unparalleled access to key places in the metro. It banners the ideas of access and convergence to make sure that its residents are never too far away from the things that count. Also worth noting is the fact that Mandaluyong is one of the best places at the moment to invest in property, with values continuing to rise due to high consumer demand, making Aveda Towers Verge a very worthy investment.
For almost 3 decades, Aveda has been providing thoughtfully designed homes in secure communities. And with proximity becoming more and more essential in modern living, they have listened once again with the unmatched location and value proposition of Aveda Towers Verge. So now, residents won't ever fear that they are missing out on anything again.
And we're back. I'm still with millionaire teacher Andrew Hallam, and we're talking about how you can build wealth even with a low income. So, Andrew, you've already mentioned about some very important and practical tips on how a low income earner can save money, like
Hmm.
being frugal, tracking your expenses, and some benefits like happiness and important very important thing that you mentioned is all about building healthy relationships. Now, what are the other things or other wealth building tips that you can share to our audience today tonight?
Well, I think, starting now with something that you ended with when you talked
Mhm.
before about that Ponzi scheme. If
Mhm.
somebody tries to sell you something, okay, walk
Mhm.
away. A good investment strategy is never sold to you. Like nobody will actually come up to you and say, hey, I've got this wonderful opportunity. Of course, they'll try, but anytime someone does that, walk away. Walk away. The best investment opportunities are not sold by somebody else, right? So if somebody is trying to convince you to get into a scheme and they're telling you about on really high profits, you're dealing with a Ponzi scheme or some kind of scam, or sometimes just a legal scam, like something that's perfectly legal but is horrible, and the person that sells it to you will make a fortune and you will be left like not making a lot of money. So they'll be filled with promises, and I think that's the most important part that I want to be able to express to people, because so many people want something that's quick, a quick way to make money. And if you live by the sword, you die by the sword.
Die by the sword.
Yeah, this is not what you want to do. So the idea in my books is to build, if possible, build a diversified portfolio of ETFs or index funds. And I know in Dubai, one opportunity, and I'm actually quite impressed with the company Sarwa. So with Sarwa, they will build a diversified portfolio of index funds for their clients, and you can start with as little as $500. So they don't promise that you're going to make like 300% next year. In fact, they don't promise it. They don't promise that at all. But what happens is when you invest in it, think of putting your money in thousands of different company baskets. So when you invest with them, they put a small amount of money into Microsoft, and a small amount into Apple, and a small amount into ExxonMobil, and a small amount into Tesla, and a small amount into Pfizer, and like thousands of companies. So you've spread your risk across thousands, and over time, that money, obviously, it will rise and fall with the markets, but over time, you will end up making money and you'll end up doing well. So it's again like that snowball effect. So if Warren Buffett, who is the world's greatest investor, if he lived next to you, if he were your neighbor, and you said to Warren Buffett, how can I invest my money so that long term I give myself the highest statistical probabilities of success? He would say, build a portfolio of index funds and add money to it whenever you have the money. So if it's once a month, you add once a month. If it's once every 3 months, you add once every 3 months. You don't try to forecast where stocks are going. You don't worry if stocks have dropped. You don't worry if stocks rise. You just continue to do the same thing. Continue to add money. So you can do this on your own. But for people starting out, Sarwa gives you a really good option because they do the work for you. So you can open an account with them with as little as $500, and they will put your money into a diversified portfolio of ETFs. And if at some point you want to do it on your own instead, that will save you a little bit because Sarwa does charge a small fee. So that will be a fee then if you're doing it on your own. It's a small fee you don't have to pay. But even if you choose to stay with Sarwa, it's a wonderful option for people, Jay, who don't have a lot of money. You just have to have that first 500. So if you can somehow put together that first 500, work really, really hard to get that, then you're on your way.
Nice. And actually, there's this one other player in the market. They just came to Dubai or the UAE. They started in Singapore. It's actually what I'm using today. They're called Stashaway, and I've spoken to the CEO last week. Last week rather, Mikel Ferrario. It's similar to Sarwa, and they also have it. The cost of entry is lower. I think it's just the one that I did is was 100 dirhams. So the
Wow.
yeah, as in it's really low. The cost of entry is really low, and that's also the reason why I'm asking my Filipino friends to read this book, okay, and invest in Stashaway, because the things that you mentioned here, like the legal scams out there, and the ETFs, index funds can be applied in through investing to Stashaway because of their low cost of entry.
Mm,
And because of the pandemic situation, a lot of people got their salaries cut in half, and
mm,
they could barely save and invest. So that's one thing that I've always been recommending. And I think once you are actually financially better, you can go to other brokerage firms like was it Interactive Brokers, and you can
mhm,
buy other ETFs. And but yeah, this is actually a great start for everyone. It helps the retail investors, small time investors, automate their investments and
mhm,
have it globally diversified. So by the way, talking about global diversification, Andrew, because a lot of Filipinos love investing in our home country, the
mhm,
Philippines. Yeah, but the sad part is that our financial system is not as ahead versus of Canada, of US, and of Europe. So, what would be your suggestion or recommendation, at least for people who want to definitely retire back in the Philippines,
mhm.
for a person who is a Filipino expat, or for a person who is living in the Philippines?
Well, when you build a diversified portfolio of ETFs, you have exposure to the entire world's markets.
Mm-hmm,
And that's something that I really recommend, because if for some reason the Filipino peso drops a lot,
mm-hmm, mm-hmm,
if it drops a lot, the goods and services that you are paying for are going to rise as a result of inflation. So
yes.
you'll pay more for it because your peso has dropped.
Mm-hmm,
So when they import things from different countries, if the peso drops, you pay more. So even if you're investing in something that gives you a set interest rate, let's say a 6% bond in pesos,
mm-hmm,
there's always a risk of only investing in a single currency, right?
mm-hmm.
So
Yep.
if you invest in a diversified portfolio of ETFs, it may actually be priced in a single currency, like it looks like it's in USD or Canadian
Mm-hmm.
dollars
Yeah.
or Great British pounds, but it's actually not. It's fully diversified across a whole basket of currencies. And so this is why it's a much safer option. It's something that I do. So if I were living in, I retired in Europe, all of my
Mm-hmm,
money is not in euros. I would have like a global stock market index, and just by
mm-hmm,
owning that, I have exposure to every currency. So if for some reason the euro drops, and prices of everything I'm buying, if I'm retired in Europe or living there, prices of everything I'm buying in euros rise. That's okay relative to other currencies. That's okay because my global
mm-hmm,
stock market portfolio has exposure to the Australian dollar and the US dollar and the
mm-hmm.
New Zealand dollar and the peso.
Yes, it's globally diverse. And
Yeah.
correct me if I'm wrong. If I remember it correctly, after I finished your book in one my first reading of the book, you mentioned there that if you are going to invest in an emerging country, so Philippines is one of them. You mentioned that maximum of your portfolio should be 13%, 13%,
Mm.
because globally, that's like the percentage for a global market fund, or how would you say that again? Sorry.
Oh, the
So you mentioned
13.
like 13%
Yeah.
as a, yeah. If you're gonna invest in an emerging country, it has to be maximum of 13%
Yeah, and when I say 13%, I'm actually referring to emerging markets as a whole.
as a whole.
So
Yeah.
as a whole, yeah, so not 13% just in, say, the Philippines. And so,
Mm-hmm.
yeah, if it's an emerging market, obviously it's much more volatile. The currency is more volatile. The elements of inflation are more volatile. So inflation in the Philippines was almost 6% in 2018.
Mm-hmm.
That's really high.
Yeah.
Right?
True.
I think it hit like 5.8% or
Yeah.
something like
Exactly.
that. Like in today, that's like today's climate, that's really, really high. So the idea really for someone from the Philippines is um, not even really to worry about necessarily Filipino exposure. Just build a fully diversified portfolio, like if you go with a firm like Sarwa, and I'm not sure how Stashaway allocates
Yeah.
their money, but
Mhm.
if it is a globally diversified portfolio of ETFs, it's a much safer option than continually putting your money into something that will be generating interest in just pesos.
Mhm. Yeah, but let's say because we cannot. I mean, for me, I cannot just ask people to invest globally. Many still have this home country bias, and
Mm-hmm.
majority of the money is going back to the Philippines. So if I'm going to put a cap on it, let's say, would it be safe that if you invest in the Philippines, maximum would be 13% for everything, let's say for real estate, for bonds, for stocks, and then the the rest of the portfolio is globally diversified already?
Yeah, that's a good question. I think that if it's if it's real estate, that's another thing, right? And I
Mhm.
do understand that there are people who are going to be really good at purchasing revenue generating real estate properties. And so
Mhm.
if they know the Filipino market and they like to buy real estate properties that they can rent out, then the
Mhm.
idea for them to limit their overall portfolio to 13% of the Filipino market is a little bit crazy, because
Yeah.
this is their home market. They know Filipino real estate. They're savvy in terms of their buying. And
Mhm.
so for them, I say, yeah, go for it if that's something that you want to
Mhm.
do. But when you're investing in something like the stock market,
Yeah.
I would say, go a little light
Yes.
on the Philippines. So you don't even really have to think about it so much. Just
Mhm.
build that globally diversified portfolio in that case,
Mhm.
because you're already going to have a lot of your money tied up in the Philippines anyway.
Yeah.
If you
True.
live in a home, that home is basically purchased with pesos. So there's that
Mhm.
element there as well. So
Yeah.
that's piece of your, I guess it's part of your wealth equation, isn't it?
Yeah, true. And I actually put a hold on my paper assets in the Philippines, and heavily heavily invested on global funds or global ETFs through Stashaway.
Mm,
And yeah, I think real estate is one good investment in the Philippines right now because of the current situation. Developers are giving better payment terms and all.
mhm.
So, all right, well, thank you for that because I really want to clarify that 13% on the book. Now, you've also mentioned about other investment tips, and you mentioned about staying away of those people who might get your money from you. And in addition to those things, what would you be suggesting people who are trying to increase their income, invest their money, and staying away from lifestyle inflation at least? And what else would you recommend?
In terms of an investment, or just in terms of tips for building your wealth?
Yeah, I think for both.
Yeah, I think, Jay, that's a good question. I think one thing that really helps is, let's assume that I'm going to take it into a sports analogy for a moment.
Okay, let's
So
go.
let's assume that, you want to make you're you want to make a specific football team.
Yeah.
You love to play football, you want to make a team.
Hmm.
One of the best things that you can do is to surround yourself with other people who want to make this specific football team, right?
Yes.
You want to surround yourself with players who are better than you,
Yes.
who can learn from, you can encourage each other. And I think that's the key. Encourage each other. So if you're trying to somehow get ahead financially and you're constantly surrounded by people who don't care, it's really, really hard, right? It's kind of
Yes.
like, you know, you want to lose weight and you're surrounded
Mhm.
by people who eat nothing but ice cream. It's going to be really difficult. So you find the people who are doing similar things or have similar goals, and then
Mhm.
you encourage each other. So it doesn't matter what, if I want to run a marathon,
Mhm.
it's hard for me to do it training thinking just by myself. But if I can get other people together who also want to run a marathon, and
Mhm.
we cheer each other on, we talk about it, we encourage each other. When we have setbacks, we're there for each other. we give each other little tips.
Mhm.
It's so much easier to reach your goals when you find a group of people with like-minded interests. So if you don't know anybody with like-minded
Mhm.
interests, start to talk to people and get people interested, and get
Mhm.
people, start to show them that their future could look a little bit brighter. And then as a team, you can encourage each other.
Nice. So it has, I mean, you have to surround yourself with people who are also savers, investors, and are really good with money. And
Yeah.
one of the best ways is, if you really have no one to ask, is to look for books that of top selling authors like Andrew. I mean, if I read this book 5 years ago when I came to Dubai, I wouldn't even be scammed. Definitely not. And that's a fact. It's just that all the things that I've learned right today are the things that are based on trial and error, and it was really costly, guys. So I mean, and one of the purposes of this podcast or program is to help you stay away from those schemes and build wealth slowly, patiently, and
Mm,
more, probably frugally as well. Now,
mhm,
Andrew, I missed this question a while ago, because you mentioned on the book as well about the 4% rule, and
mhm.
I just want to know if it's still relevant, because during your time, I think this is really uh something that is heavily promoted by a lot of personal finance gurus and personalities. And do you think it is still relevant today? And does it also apply to Filipinos, considering that we are in an emerging market, or we are in a developing country?
It's definitely relevant today, and it's definitely
Mhm.
relevant to people that live in an emerging market, because again, if it's a globally diversified portfolio, the idea is that you should be able to withdraw 4% of that portfolio indexed to inflation every
Mhm.
year, and not run out of money for at least a 30-year duration. So just to give you an example, so if somebody has um, whatever, we'll just make up a number, like
Yeah, sure.
say somebody has $1,000, right?
Okay.
Let's say. So the idea is that they should be able to sell 4% of that $1,000,
Mhm.
and so they would do that in the first year,
Mhm.
right? And so they would sell $40 in the first
Yep.
year, and then in the second year they would sell a little bit more, like something
Mhm.
like $44 or 43, so just to cover inflation. And
Mhm.
each
Mhm.
year they'd sell a little bit more of it just to make sure that their withdrawals cover inflation. And if the portfolio is globally diversified in
Mhm.
in a basket of index funds,
Mhm.
they should be able to do that in perpetuity, like at least a 30-year retirement. So the studies have been back tested right back to 1926. So the thing about that is that if it's been back tested to 1926, it actually included the biggest stock market crash in history, which was the
Mhm.
1929 to 1931 crash. So it would have worked even during that period. So some people like to try to push it and say, "Oh, I'll
Mhm.
withdraw 5% or
5%.
6%."
Uh-huh.
And in some cases you could, but 4% is the most that you could withdraw when you look at all of history's nastiest scenarios. And so it's an important benchmark, I think,
Mhm.
to establish, knowing that something could happen, like another 1929, or you could get a 2008 financial crisis on the day you retire. And if you do, it's good to know that the 4% rule still would have got you through that time period.
Okay. And for the Philippines, the average inflation is 4 to 5%, and I think the 4%
Mhm.
rule is based on a 7% return on the market, and on a 3% average inflation rate of the US. So we
Yeah.
just have to adjust it, right? So for us, would it be? It's not 4%. It should be like what, 5% at least.
No, you take out 4 in the first year.
Uh,
And
Okay.
if inflation is, let's say, 5% the next year,
Uh-huh.
then you add 5% to whatever sum it is you took out in the first year, and that's what you would withdraw in the second year. So
I see.
we've had inflation in North America that was 12 and 13% per year. And so like in the late 70s and the
Mhm.
early 80s, inflation was really high. And
Mhm.
so literally if somebody were doing the 4% rule and they were
Mhm.
pulling out, let's say $100 in the first year, and inflation was 12% the next year, the second year they would have to pull out $112. So they'd have to give themselves a 12% adjustment. And
Wow.
so, yeah, so that's actually really important, because we have had periods of high inflation
Yes.
globally as well, not just in the Philippines. What is really interesting though is when you get a country that gets really high inflation,
Mhm.
often it's a result also of the economy struggling and that currency dropping. So in
Mhm.
Argentina, for example,
Yes.
most recently we've had really high inflation in Argentina, um,
Mhm.
relative to their peso. So I think their
Mhm.
currency is also called the peso.
Okay.
And so they can handle, like, we're talking about like 20% inflation. The 4% rule still works because the portfolio is globally diversified. So
Mhm.
it's in US dollars, it's in British pounds, it's in Australian dollars. And so those currencies haven't dropped. In fact, those currencies have risen a lot relative to the Argentinian peso.
I
So
see.
that inflation is relative to the Argentinian peso. And so that's
Mhm.
why this diversification across several different baskets, it
Mhm.
actually protects you against what might be hyperinflation potentially in, especially in a developing market country.
Yeah, and that's a perfect reason why every expat should be globally
Mhm.
diversified.
Yes.
Wow. I first heard or read that on Unshakable, on the book of Tony Robbins on Unshakable, but
Mhm.
it didn't shake me than than this book, to be
Yeah,
honest.
yeah, yeah,
Yeah, I mean, I thought that okay, whatever Tony was telling on that. I mean, it's a good book, but I thought that it was just based on on a US setting.
yeah,
And then when I read this book, okay, this something relates to me because I'm I'm an expat in Dubai, and
yeah.
I should follow this because there's one person who succeeded using these steps, and I always believe that success leaves clues, and whatever it is that you've learned all throughout your life, you've placed it here, and it's like a bible for personal finance, and really hope that many Filipinos would apply this. So also, um talking about cryptocurrencies, I just want to know your thoughts on it. And during your time when you were building wealth, was there ever a type of asset that was like or very similar to cryptocurrencies, and people were saying that this time this is different, this is gonna be better than the stock market and the bonds and the real estate, but
Yeah.
eventually it didn't. So what are your thoughts on it?
There's always, in every generation, there will always
Mhm.
be something that is making people loads and loads of money really, really fast.
Mhm.
And it will be supposedly going to change the world. Um, but and sometimes that lasts for years, 2 years, 3 years, 4 years. But eventually these big promises eventually come back down to earth. And they always have a fabulous story about why this time it's different. This time it's going to go to the moon. This time it's going to keep on going for 10, 20, 50 years. You're going to be able to retire rich. It's just so easy. It's so easy. Unfortunately, every generation faces something like this. My
Mhm.
my quick recommendation with the cryptocurrency
Mhm.
is no. Don't put your
Mhm.
money in a cryptocurrency. It's just like gambling. So
Mhm.
I don't think anybody should gamble. I think gambling is really for people who aren't good with mathematics,
Mhm.
like a lottery ticket. I don't think
Mhm.
anyone really
Yeah.
should buy lottery tickets.
Yes.
And I really don't think people should buy Bitcoin. What's going to happen is this: a whole generation is going to get burned, as they
Mhm.
do, by the hot thing that's always the hot thing of the day or the hot thing of the decade. And that
Mhm.
generation, they'll try to tell their children, because 20 years from now, when they have children who are young
Mhm.
adults, their children will come and say, "Mom, Dad, there's this new thing, and everyone's making so much money, and I've got to get in. And I've just made 200% last year." And the same people that got burned by cryptocurrencies today, or it might be a year from now or 5 years from now, will try to tell their children, no, no, I have to tell you, the whole this time it's different thing, it doesn't work. There's no fundamental value in that thing. It's just big smoke and mirrors. And
Mhm.
they'll try really hard to convince, just like I'm trying really hard to convince now. But many people won't listen, and many of their children won't listen, because it's almost a mistake that people almost need sometimes to get burned before they really learn it. And then the sad thing is, they can't teach it after they've been burned. That's the hardest thing. They're trying to teach to the next generation, but the next generation also needs to get burned before they learn. So yeah, it's like every generation has one of these stories, Jay.
Yeah, I got burned with the Ponzi scheme that I've that I joined to 5 years ago, and I kept telling people to never join such schemes, and they would learn it until they get burned.
Yeah,
Burn until you learn. And
yeah.
during your time, what was that cryptocurrency when you?
Oh,
Yeah.
great question. It was interesting because it was something that was changing the world. So
Mm-hmm.
whether cryptocurrencies themselves become viable uh,
Mm-hmm.
exchange pieces like the dollar or
Mm-hmm.
not at this stage, I don't know. Maybe they will, but maybe they won't. They're not a practical thing to purchase with, though, because the value can drop 10, 15% in a day. In fact,
Mm-hmm.
it could drop 85% in a 3-month period, which is what it did in 2019. So
Mm-hmm.
then you want to buy a house with something and you want to buy it now because you have an opportunity to buy a house, but your cryptocurrency has dropped 85%. It's not a viable thing right now to be purchasing with. So it's just a big gambling deal at this stage. But back to the question, the internet was changing everything, and we knew the internet would change everything. And so people were saying, well, anything that had .com at the end of it, any internet related stock
Mm-hmm.
was was going to make everybody rich. And so you would meet people who said, I made 1,000% on this stock, and
Mm-hmm.
the company doesn't make money, but one day they will. So
Okay.
the stock has increased 1,000%, but the company hasn't made any money, but one day they will. Well, there's a pipe dream there, right? Maybe they will, but
Maybe.
maybe they won't. And what's sad is that people all get in after hearing the stories of easy money, that somebody had made so much money. There was one that, and it seemed to make so much sense. It was called Global Crossing. And what they were doing was they were actually laying fiber optic cables across the
Mm-hmm.
ocean floor. It was totally legitimate. They were
Wow.
laying fiber optic cables to provide access to the internet for the world. And the business sounded great. And the stock price was going like crazy. It had gone up
Mm-hmm.
like 200% one year, and then 300% the next
Wow.
year, and then 500% the next year. And it was unbelievable, Jay. It was unbelievable. And so
Wow.
it's like, well, this is the future. This is the future. But the thing is, the business itself
Mm-hmm.
never actually was able to turn a profit. And
What?
so, because it wasn't able to turn a profit, obviously the expenses associated with laying all of that fiber optic network cable,
Mm-hmm.
the expense of doing that was more than the revenue that they were getting from it. And of course, then
Mm-hmm.
they were competing with things they'd never thought they'd be competing with, like satellite, right?
Yes.
And then things changed just like that. And so this company ended up going bankrupt. Um,
Wow.
so yeah, so I have so many stories like that, so many of them. Yeah, it's the whole get rich quick thing. It will burn people in every generation.
Yeah, and in addition to that, I think the hottest stocks right now are the tech stocks, and
Mhm,
a lot of people are jumping into tech stocks, and probably it's also similar to the internet stocks that you mentioned
mhm.
say a while ago, right? So, and one thing that you also recommend is to not pick individual stocks, but rather invest on index funds, like what we
Mhm,
have said a while ago. And I mean, if you are on a low income, and many people are lured to try those things out because probably out of desperation
mhm,
to have a better life. And it's very important for us to say that we, even at a low income, you really have to make sure that you stay the course, because
mhm,
here's one thing: building wealth is a skill, and if you cannot manage a small amount of money, then you cannot also manage a huge amount of income or profit.
mhm,
Let's say that, and that's also one of the reasons why many lottery winners don't last that long, and they
mhm.
end up being broke than before they even won the lottery.
Yep.
So, and in addition to that, you this also goes to, I mean, this is also something relevant to forex trading, stock trading, any form of active trading, right?
Exactly. Yeah.
Oh,
It's yeah. If you build a portfolio of index funds over your lifetime, you'll beat almost all professional traders. And so the temptation is the trading. That's what excites
mhm.
people. And there are lots of advertisements. Buy this software, buy our trading formula. Let us teach you to trade.
Yeah.
You'll make so much money. The people that make the money are the people selling you that crap. They're the people selling you the software. They're selling you the story. They're the people that are making the money. They'll have these great stories. Don't fall
Yeah.
for the stories. Fall for the long-term fundamental evidence. Listen to people like Warren Buffett, who will tell you he is world's greatest investor, and he says, "Listen, you will beat the vast majority of professional traders with a portfolio of index funds. So, especially don't waste your time on quick get rich quick schemes."
Yes. And even those legally sold actively management savings programs that will
Yeah.
lock you up for 5, 10, 15, 20, or 25 years.
Yeah.
Ah,
I hate those.
yeah, me too. So that's why I'm here. Okay, just a few couple of questions, probably last two questions. I'm curious because I've also read, well, I haven't read your first book, The Millionaire Teacher, but I've seen the 9 rules that you mentioned there. And I'm curious why insurance was not part of it. And I think many, even I believe in insurance, and many personal finance personalities also mention about insurance. But in your book, it's not there. It's similar to Dave Ramsey's, I mean, baby steps. He didn't mention the insurance on the baby steps,
Mm.
but for your 9 rules to building wealth, it is also not there. I'm just curious why.
We can't build wealth with insurance.
I see. It's based on protection. I get it. And you know what, Andrew? I just want to tell you this because many many financial advisors in the Philippines are telling that buying insurance is part of building wealth because there's this insurance plus investment savings program that
Mm,
is very popular in the Philippines right now.
mm,
So it's, you just
mm.
answered it. I mean, insurance doesn't build wealth. It is something that you use to protect it.
Yeah. So, and with insurance, many of these investment schemes will mix insurance with the investment. Never mix insurance with an investment. So they should never be the same product. When they are, you know it's a bad product. So, yeah, insurance really is that protection. So you buy medical insurance.
Mm-hmm.
Okay, so you get buy medical insurance in case you have a medical cost and you need obviously some kind of insurance to cover that. You for your children, you could buy term life insurance,
Mm-hmm.
especially if there's no one to look after them if you die. And
Mm-hmm.
so financially, if you die, they will at least get some money, and that money might be able to go then to the people who are going to look after them. And
Mm-hmm.
so
Mm-hmm.
they can perhaps help pay for their education and pay for their upbringing. So yeah, insurance is not a way to build wealth. Um, unless like, you insure your spouse and then you throw them off a bridge. It's not a way to build wealth.
What a nasty way to build wealth.
You can tell where my head is. I'm just watching this crazy show on like these prisoners and these criminals, and it's a it's kind of, so it's kind of a bit of dark humor there.
I never thought of that actually. And that's what I like about why I love speaking to you, because you can inject humor in every conversation. And I always go back to your book. Your book has full of humor. The first financial personal finance book that has a lot of humor. First book that where I saw the word fart in it. That's the first thing, and it really got me hooked. So now, Andrew, down to my last question. And this is the question that I always ask my audience or my guests, since um, my page is all about purpose driven finance. Okay, Andrew, how do you want to be remembered in terms of how you used your money?
Oh, how do I want to be remembered? In terms of,
Yeah.
I hope I'm not remembered as to how I use my money. I would
Mm-hmm.
much rather be remembered as someone who could listen to his friends,
Mm-hmm.
not be judgmental, someone who during non-COVID times could give people a hug
Mm-hmm.
and give people support. So my hope is that I'm not remembered at all for my money.
Mm.
That's not the answer you expect, but it's a real honest answer. It's the honest answer from my heart.
Wow. Af- I mean, after all the things that you've shared, and it's
Mhm.
still, I mean, it's still about relationships after all, right?
Always, if at my funeral somebody
Mm-hmm.
gave a speech and they talked about how I was good with money,
Mm-hmm.
I would be somewhere crying.
Yeah, nobody is even remembered by the amount of money they have in the bank account, but the
No,
memories that
yeah.
they've left
That's why I
here on
like,
this earth.
Jay,
And
you talked about
okay, so
You talked about Stephen Covey's book, right?
yes, this is I think second habit. Begin with the end in mind.
Yes, exactly. 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 So the idea of like your funeral and what are people really saying about you and what do you want them to say? And so when you think about it from that perspective, then be that person. Be that
Hmm.
person now
Now,
who,
yes.
and that's the important part. Yeah.
All right. Well, thank you so much, Andrew. I really learned a lot of things, not just money, also in life. And I really hope that I can speak to you again. I know you're a very busy person, and I don't want to get a hold of you so long. And how can our guests or how can our audience get in touch with you, or where can they buy their book? I think you have a website, and
Mhm.
your book is also it's your website is andrewhallam.com, is it?
Exactly. And on the website, I
Mhm.
actually have a what I call a kindness lottery. So there's a sign up. So if you sign up once a month, I'm going to be drawing a name from the total number of people that have signed up.
Mhm.
And I'm going to ask the winner to tell me who they want me to send the book to. So this is a little different. This is different.
Mhm.
The winner of the lottery doesn't
Mhm.
get the book. They don't get the book, but they get to tell me who to send it to, like a friend, a brother, a sister, um, someone they think would enjoy it. And so if I pulled your name, Jay,
Yeah.
and you said, I've got a really good friend and
Mhm.
I want to give it to her, and I would say, okay, tell me her name, and I would write it to her and say, your
Mhm.
friend Jay said that you might really like this book, and then I'll
Yeah.
mail it myself. So I will sign it and I would mail it myself. And you tell me something about your friend so I can put in some humor, something in the book. And so I'm going to be doing this every month with
Uh-huh.
a copy of my book, Millionaire Teacher. And
Okay.
also, when you sign up, you also get the first chapter of my next book. And so
Wow.
my next book, first chapter, you get the download right away. And that book comes out January 2022.
Ah, it's still a long time. I want to
Mhm.
read it now.
You
And
can read the first chapter.
if I, if ever I win that lottery, I'm gonna send that book to a personal to a financial advisor that I know. So guys, your book is also on Amazon, right? So buy
Yeah.
his book, The Millionaire Teacher, The 9 Rules of Building Wealth, and my all-time favorite personal finance book, Millionaire Expat. Don't I mean if you really want to build wealth, even on a small income, or even if you're a high income earner, you really have to buy this book, because like what we said, a lot of people are there, a lot of sharks are there trying to steal your money away from you legally. So you got to read this book. This is your way of defense. I'm gonna flash it again, okay? This is the book, Millionaire Expat. This is, I think, the 100th time that I've flashed your book on my program, on different episodes as well. So and once again, I would really
Yeah.
like to thank you, my sincere gratitude for being here, for writing the book, and for this wonderful conversation that we had.
Salamat.
Walang anuman. And guys, that wraps our episode for tonight. I hope you gained a lot of wisdom from millionaire teacher Andrew Hallam, and I hope he has inspired you to build wealth even with a small income. So if you missed the entire live session, or if you missed this session, you can listen to this on my Pera and Purpose podcast through Spotify, Anchor, and Apple Podcast. And don't forget to follow Purpose Driven Finance on Facebook, Instagram, and LinkedIn. And make sure you visit Andrew's website so you can win, or you can win the lottery and give his book to one of your friends who you think would benefit from whatever he is that we are telling you in this episode. And once again, this is Kuya Jay together with Andrew Hallam, telling you to prosper with a purpose. See you next week. Thank you, Andrew.
Thank you.